Next up is Palantir. There's been a lot of analysts coming out lately who have not been so excited about Palantir. They're saying demo day wasn't great. Valuation is pretty high. It's like a $40 billion valuation, and it's not really justified where it's at. That's what a lot of analysts are saying. But on the other hand, many people are talking about that a lot of aspects of Palantir are being overlooked right now. And even though it's priced at a premium, it's very justified, and actually long-term, it could still easily 10x from where it is right now, considering all the government contracts they have, considering how much growth they're having in, government contracts, commercial contracts, and the importance of data analytics in general. So right now, what a lot of analysts are looking at, which is not really the best way to value Palantir, is a lot of them are looking at just the straight up growth of their commercial contracts, comparing that to their government contracts. So recently, their revenue grew by 21% for commercial revenue, and government segment revenue grew 77%. So yes, if you're looking at those two, their government contracts revenue is growing a lot faster than their commercial contracts revenue. My opinion, I don't think that's bad at all. I think having, government contracts is great. It legitimizes your company. It makes more, Fortune 500 businesses trust you, because if I was a business owner and I was looking for a data analytics company, and let's say, it's a $100 million company, well then if you could do business with companies that work with the government on top secret projects that handle a lot of important information, and they do that well, and these government contracts keep getting renewed, keep getting expanded, I would have a lot of trust in that business, and that's exactly what Palantir is doing. So right now, commercial revenue grew by 21%, and government revenue, their government segment revenue growth, was 77%. But that doesn't really show us the whole picture, because even though that is, in terms of year over year revenue growth, key thing happened, which was that they just changed their business model from doing long-term contracts with a lot of money paid up front to now having more of a recurring revenue model where they don't charge as much up front, and it's just a recurring revenue model instead of having these long-term agreements with a lot of money up front. This is important because when you start to look at that, if you're looking at just revenue from government contracts versus commercial contracts, well, obviously, if they just switched up their model, they're not going to be getting paid as much up front. So if they're just looking at revenue year over year, looking at that growth, right now they're starting to get paid less up front, but more recurring. So long-term, recurring revenue. And that's important because you have to look at the remaining deal value. So when a contract is signed, they pay a certain amount up front, and then there's a remainder amount in the contract that's going to either be paid. Sometimes, things don't always work out. Some things get canceled, but you have to look at how much money is left on that contract that's going to get paid, because, that's important long-term. And when you're starting to look at that with Palantir, the commercial revenue, actually, the commercial segment, their customer segment, their revenue, the remaining deal value actually rose by approximately 45% year over year, which was responsible for driving the company's overall remaining deal value higher, and it now accounts for the majority of their remaining deal value. So right now, the majority of the remaining deal value, the remaining money left that they're going to receive from their contracts, is actually from the commercial segment of their business, from commercial customers. This is really important, and a lot of people are overlooking this. So it's important to realize that with this change in their business model, now a lot of the money isn't going to be recognized up front, but it's going to be recognized long term, and that's going to change, So when you're just looking at year over year revenue growth, it's not the best way to look at it. You really should be looking at the overall remaining deal value instead. So that's something important that a lot of analysts are looking past, but I think it's really important. I'm very bullish on Palantir. I think it could easily be a $100 billion company, easily reach $100 per share within the coming years.